Again, we're talking insurance. Yes, a necessary evil. And even more of a necessary evil is customer contracts. That's what we're talking about today. So, what do you need to be aware of? First of all, any customer contract that you get, send it through to your insurance broker. Insurers will not help you in this area. Your insurance broker should have knowledge in terms of indemnity clauses, insurance clauses, what the insurer will accept, what the insurer won't accept, and then how can they make their insurance program, make your insurance program comply with your customer contract. What do you need to be aware of? First of all, you need to start with the indemnity clause. What is the indemnity clause? Basically, the clause states really or articulates that you are indemnifying the principal for costs incurred in relation to your negligence. It would apply whether there would be a contract or not. So, what you need to be careful of with the indemnity clause is its scope. You want to reduce that scope right down, generally to the directors, officers, the employees, and the agents. You don't want to be indemnifying contractors, subcontractors, and anything else beyond that. Your insurer will not accept that, so you need to limit it right down. Number two, in regards to the indemnity clause, it needs to state that it will apply if you are directly negligent. Not indirectly negligent, but directly negligent. After the indemnity clause, you need to have a look at the insurance clauses. Now, the insurance clauses will follow from the indemnity clause. Things you need to be aware of when it comes to insurance clauses is waivers of subrogation. Outside workers' compensation, that is generally okay unless you're in labour hire. You won't be able to get any extensions under your policy as at today, but a workers' compensation principals indemnity extension provides that indemnity as well as the waiver of subrogation. However, when it comes to general liability, you need to be very, very careful. Generally, we don't like to see that if there's a waiver of subrogation. Why we don't like to see that? If our insurer is indemnifying the principal and say 6 months, 9 months down the track, it's found that the principal was indirectly negligent or contributorily negligent, then with that waiver, our insurer cannot recover some of those costs from the principal. How do you get around it? First of all, you need to deal with the contracts administrator, try and have that waiver of subrogation removed. Second of all, if they're being very stolen and they will not move off that waiver, then you need to present that contract to the insurer, to the underwriter, and have them priced in that particular risk. So because there's a waiver, there's indemnification, then the insurer, depending how big the contract is, depending on the circumstances, generally they will want to price that one in. If you don't tell them about that, there is this exclusion under the policy called contractual liability exclusion, whereby if there is an event, there's a general liability incident, and you put in a claim through, and your insurer tries and recovers against the principal is going to put the contract right in front and say, hey, you waived your rights of subrogation. Then you've got a potential breach of your policy. So you need to be very, very careful with that. Third thing that you need to worry about or be concerned about, and this goes outside of our AFSL, this goes outside of insurance broking and insurance, but be very careful when it comes to liquidated damages. That is a bit of a headshot, so you need to be aware of it and try and have those clauses removed if you can.